You've heard the hype about crypto, but what if I told you the real revolution isn't about moonshots and memes? It's about plumbing. That's right. While the world is busy debating the price of Bitcoin, Visa is already using crypto to move billions of dollars, and it's quietly changing the very foundations of money. Here's the story of how they're building the future of finance, one digital dollar at a time. Every single day, trillions of dollars crisscross the globe. It's the lifeblood of international trade, the engine that powers our modern economy. A business in Germany pays a supplier in Vietnam. A designer in the Philippines gets paid by a startup in San Francisco. A family in Mexico receives money from a loved one in the United States. We take it all for granted. We tap, we click, we send, and we just assume the money magically appears. But behind that seamless illusion is a hidden world of staggering complexity, a system groaning under the weight of its own history. This is the world of cross border payments, and it's fundamentally broken. It's a 20th century relic trying to keep up with the 21st century's pace. And this inefficiency isn't just some minor inconvenience, it's a multi trillion dollar tax on the global economy. Let's pull back the curtain. When you send money from one country to another, it doesn't go in a straight line. It takes a winding multi day detour through a network of correspondent banks. Think of it like a cross country flight with 3 or 4 layovers. At each stop, your money gets unloaded, checked, and reloaded. Each layover adds time, cost, and a fresh chance for something to go wrong. This is the correspondent banking system. For a US bank to send money to a bank in Thailand, it needs a direct relationship, or it has to find another bank that has a relationship. Each of these banks acts as a toll booth on the global financial highway, taking a fee for its trouble. Each one runs its own compliance checks, scrutinizing the transaction for fraud or money laundering. And here's the real kicker. These banks operate in different time zones with different business hours and holidays. So, a payment you start on a Friday in New York might not even begin its journey until Monday morning in London, and then it might have to wait for Tuesday to arrive in Singapore. This is why a simple international transfer can take 3 to 5 business days to finally settle. Imagine trying to run a business on those terms. You ship your goods, but you wait a week for the payment to clear. That's a week your cash is tied up, totally inaccessible. It's a gamble known as settlement risk. You're exposed to the chance that exchange rates could shift while your money is in limbo, wiping out your profit margin. Or worse, the payment could just fail because of a typo or a misplaced compliance flag at one of the stops. There's no transparency. The money vanishes into a black box, and you're just left waiting. This doesn't just hit the big corporations, it hurts small businesses, freelancers, and families relying on remittances the most. The high fees and wild unpredictability create a massive barrier for anyone trying to compete globally. For a small online store, a 3% fee on every international sale is a huge burden. For a family, that fee means less money for food and education. The global cross border payments market is projected to grow to nearly $239 trillion by 2027. And the friction in this system represents a mind boggling amount of wasted time, capital, and opportunity. But the problem goes even deeper than just slow, expensive transactions. The system's basic design forces businesses and banks into what can only be described as a global liquidity trap. To get this, we need to talk about pre funding because it takes so long to move money between countries. Businesses can't just send money when they need to, they have to guess how much they'll need ahead of time and park enormous sums of cash in foreign bank accounts in foreign currencies just so it's ready to go. This is called pre funding, and it is an insanely inefficient way to use capital. Imagine you're a global marketplace like Uber or Airbnb, paying thousands of drivers or hosts in dozens of countries every week. Using the old system, you'd have to keep separate bank accounts in every single one of those countries. You'd have to pre fund each account with enough local currency to cover all your expected payouts. Think about what that means. First, a huge chunk of your company's cash is just sitting there doing nothing in bank accounts all over the world. That's capital that could be reinvested into the business, used for R&D, or returned to shareholders. Instead, it's locked up, acting as a buffer against a creaky financial system. Second, you're constantly exposed to foreign exchange risk. If you're holding a ton of Mexican pesos and the peso suddenly drops against the dollar, you've just lost money. To manage this, companies spend millions on complicated hedging strategies, adding yet another layer of cost and complexity. This liquidity crunch hits everyone. A remittance company, for instance, needs to make sure it has enough Philippine pesos on hand to pay out to recipients. If there's a surge in demand, they need to get more pesos into their account there fast. But that takes days. So they either have to overfund their accounts, tying up even more capital, or risk failing to process their customers' transactions. For decades, this was just accepted as the price of doing business. The whole system is a patchwork of compromises built on aging infrastructure, designed more for the stability of its members than the needs of its users. But we live in a world that operates in real time. The old plumbing is cracking under the pressure. And this is the very problem that Visa, a pillar of that old system, has decided to solve, not by patching the old rails, but by building entirely new ones. So, how do you fix a system that's slow, expensive, and traps billions in capital? You don't. You build something better next to it. And that's exactly what Visa is doing. Their solution isn't another patch on the old correspondent banking network. It's a fundamental shift in how money moves, powered by blockchain and a new kind of digital asset, the stablecoin. So, what's a stablecoin? Forget the wild price swings of Bitcoin. A stablecoin is designed to be boring. It's a digital token pegged one to a stable asset, usually a major currency like the US dollar. Think of it as a digital dollar. For every one stablecoin in circulation, there is one real dollar held in a reserve account, regularly audited by third parties. This simple idea is a game changer. It gives you the stability of a traditional currency with the speed of the internet. A stablecoin like USDC or PYUSD can move anywhere in the world 24/7 in minutes for pennies. It moves like an email, not like a suitcase of cash on a multi-day flight. There are no banking holidays, no time zones, and no chain of middlemen to slow it down. This is where Visa comes in. For years, they've been quietly experimenting and building expertise. They started testing stablecoin settlements with partners like Crypto.com back in 2021 on the Ethereum blockchain. But this is no longer just an experiment. Visa is now weaving stablecoins directly into its core infrastructure. The first big move is in their own treasury and settlement operations. When you use a Visa card, the final settlement between your bank and the merchant's bank happens through Visa's own systems, clearing billions across more than 25 different fiat currencies. Now, Visa allows its partners to settle these obligations using stable coins. They began with USDC on Ethereum and then expanded to Solana, a high performance blockchain known for its speed. As of late 2025, this strategy has blossomed into a full fledged platform. Visa now supports 4 different stablecoins, including USDC, EURC, PayPal USD, and Global Dollar, across 4 unique blockchains: Ethereum, Solana, Avalanche, and Stellar. And this isn't just a side project. In a Q4 2025 earnings call, Visa's CEO Ryan McInerney revealed that the company's monthly settlement volume using stablecoins has already hit a $2.5 billion annualized run rate. Even more telling, spending on stablecoin linked Visa cards has quadrupled in the last year. Since 2020, Visa has facilitated over $140 billion in total crypto and stablecoin related flows. Visa's vision is to be the bridge connecting traditional, regulated finance with a new world of digital assets. They're building the on-ramps and off-ramps that let value flow between these two ecosystems. For their partners, it means they can settle balances in traditional currency, or they can choose the speed of stablecoins. It's all about offering modern tools and a choice. The impact is immediate. Cross-border settlement that used to take days can now happen in minutes. This frees up liquidity and dramatically cuts risk for everyone on their network. But Visa's ambition goes way beyond its own operations. They're now using this stablecoin infrastructure to attack the biggest headaches in global commerce. The most powerful proof of Visa's strategy is a new feature in Visa Direct, the company's global platform for moving money. In late 2025, Visa announced a game-changing pilot program, stablecoin pre-funding. This new capability directly tackles the liquidity trap we talked about. Instead of businesses parking huge sums of fiat currency in foreign bank accounts, they can now pre-fund their Visa Direct payouts using stablecoins. A business can send USDC to Visa, and Visa treats it like cash in the bank, making the funds instantly available for payouts in over 180 countries and 160 local currencies. Let's go back to our global marketplace example. With stablecoin pre-funding, they don't need dozens of foreign bank accounts anymore. They can hold their treasury in a single dollar-based digital asset, USDC. When it's time to pay their hosts and drivers, they just send the USDC to Visa's treasury. Visa handles the conversion from the digital dollar into the local currency, and the recipient gets paid in their familiar money, just as they always have. The change is profound. Capital that was frozen is now unlocked. Treasury management becomes dynamic and responsive, a matter of minutes, not days. For businesses with high volume international payouts like remittance companies and online marketplaces, this is a revolution in how they operate. Chris Newkirk, Visa's president of commercial and money movement solutions, put it bluntly: cross-border payments have been stuck in outdated systems for far too long. Visa Direct's new stablecoins integration lays the groundwork for money to move instantly across the world, giving businesses more choice in how they pay. This isn't a theoretical concept. Visa is already running pilots with major partners like the merchant acquirers WorldPay and Nuve. These companies process payments for millions of merchants who can now choose to get their settlement funds in stablecoins instead of waiting days for a bank transfer. This move is also incredibly timely. The financial world is finally getting regulatory clarity around stablecoins. Landmark regulations like the Markets in Crypto Assets (MICA) framework in the European Union and the recently passed Guiding and Establishing National Innovation for US Stablecoins (Genius) Act in the United States are setting clear rules. This flight to quality de-risks stablecoins for big players and gives giants like Visa the confidence to build them into their core services. They are building on a foundation that is becoming more solid and regulated by the day. By using trusted, regulated stablecoins on high performance blockchains, Visa is creating a modern, efficient, and global settlement layer. They aren't trying to replace the old system overnight. Instead, they're building a parallel set of rails, a digital express lane for money that offers a faster, cheaper, and more liquid alternative. Visa's journey into digital currencies wasn't a sudden jump. It's been a slow, deliberate, and methodical process of exploration, testing, and finally, integration. It's the story of a financial giant not chasing hype, but patiently building the plumbing for the next generation of commerce. It all started years ago when Visa's crypto team, led by figures like Kai Sheffield, saw that blockchain wasn't just about creating new currencies, it was about creating new payment rails. They saw a chance to re architect how value moves and solve problems that have plagued finance for decades. First, they focused on learning. They partnered with over 130 crypto native companies in more than 40 countries to issue crypto linked cards. This gave them priceless data on how people were actually using digital assets, and they saw spending on these cards quadruple in a single year, a clear signal of growing demand. Then came the experiments. The 2021 pilot with Crypto.com on Ethereum was a landmark moment, proving a major payment network could settle a transaction on a public blockchain. But Ethereum could be slow and expensive, so the journey continued. The expansion to the Solana blockchain was the next logical step, offering the promise of thousands of transactions per second for a fraction of a penny. By moving millions of USDC across both networks to settle real-world payments, Visa proved it was chain agnostic. The goal wasn't to pick a single winner, but to build a network of networks. Now, we're in the era of integration. The launch of the Visa Tokenized Asset Platform, or VTAP, is the clearest sign of this ambition. VTAP is a service for banks. It gives financial institutions the tools to issue and manage their own fiat-backed tokens and stablecoins. A bank like Spain's BBVA, which is already set to pilot the platform, could issue its own tokenized euro for everything from instant payments to programmable finance. This is where the true power lies. It's not just about making old processes faster, it's about enabling entirely new ones. Programmable money can automate complex supply chain financing, streamline royalty payments, and create more transparent financial products. By placing itself at the center of this evolution, Visa is doing something brilliant. It's ensuring its own relevance for the next 50 years. Instead of getting disrupted, Visa is embracing the technology and becoming the indispensable bridge between the old and new financial worlds. As CEO Ryan McInerney stated, Visa is becoming a hyperscaler for payments, providing a platform for others to build upon. They are quietly laying the tracks for a future where trillions of dollars in tokenized assets, from stocks to real estate, will move across these new digital rails, and Visa, the quiet architect, will be there to make it all happen. What we're seeing is the steady merger of traditional finance and blockchain, with Visa right at the center. This isn't just about faster payments, it's about building a more open and efficient global financial system. But this is just one piece of a much larger puzzle. The world of finance is changing at an incredible pace. If you want to stay ahead of the curve and understand the forces shaping the future of money, make sure you subscribe and hit that notification bell. And I'd love to know what you think in the comments. Is this the future of global finance, or are there risks we're not seeing? Let me know below. So, while the headlines obsess over the latest crypto craze, the real lasting revolution is happening in the background. It's happening in the financial system's plumbing. The ancient problem of slow, expensive, and opaque cross border payments is finally being solved, not by patching up the old system, but by building a new one right alongside it. Visa, a titan of traditional finance, has pivoted to become a key architect of this new world. By using regulated dollar backed stablecoins and high performance blockchains, they are creating a modern settlement layer for the global economy. They are already facilitating billions in annualized settlement volume, proving this is a functioning, growing reality. Through innovations like stablecoin pre-funding on Visa Direct, they are unlocking trapped capital and giving businesses unprecedented control over their finances. And with platforms like VTAP, they are giving the entire banking sector the tools to embrace tokenization and build the financial products of the future. This is a story of quiet, deliberate innovation. It's about a company using its immense scale and trust to bridge the gap between two worlds. Visa is building the system that will allow money to move at the speed of the internet, securely and at scale. They're not just moving billions with crypto today, they are laying the foundation to move trillions tomorrow. This is more than a tech experiment, it's a fundamental rewiring of global commerce.